Right, so Reece here coming to you with a short video breakdown covering XRP starting on the 4-hour chart. Just to look back through some of this previous price action here, we can see after price did take out this significant low, we have seen a pullback and a retest of support. Now I say that with inverted commas as this is what the retail trader is simply looking for. They are looking for a break of this support floor and a retest for a sell position. That is what all of the gurus and trading educators out there teach. They are looking for break and retest sell orders. Now, in fact, price was actually pulling back into this particular candlestick range here. Now, what I teach, this candlestick is an ISC, an inverted shakeout candle range. I'm not going to go into the details and the methodology behind that in this video, but just to bring it to your attention, just to understand how it works and why it works so good. And you can see as price, as big players taken out this low in here, they reverse prices back higher. Now, as I see that here, you may see it spread across my charts, the annotations, SC, ISC, and there is obviously methodology behind the madness. But as you see it there, that is simply an SC, a shakeout candle in my book. But when price reverses and takes out that low, that shakeout candle then becomes an ISC. And typically if I was trading Forex or day trading, this would set up a perfect entry for me to go short just by highlighting the price action here, but more importantly, understanding what is going on behind price. Now, after seeing this descend down here and the break of this level, I know that the big players who were in charge of this bid from the low to the high have given up the battle defending this bid, but they still have remaining and resting buy orders inside of this range, this particular candlestick range, because this is a bearish candle that you can see through the benefit of hindsight and previous price action, they was buying into this bearish candle. Now they still have resting buy orders inside here, and you can see as price has descended, those big players still, well, their position would now be in drawdown, right? So would it not make sense for them to bring prices as a big player, as an institution and a whale, to push and pull prices back up into this particular candlestick range so you can cut your losses on former bids? That's exactly what price does. And just look for the accuracy. We get Fibonacci up here, draw from the low of this body of the candle to the high, get this magnet off because that is bound to drive me crazy. Notice the 50% fair value Fibonacci. That is the 50% mark of this particular candlestick. Notice how price reaches and grabs into that exact price point. Now that is not random, guys, and again, that's for another video. We'll go into the details of this, but just look how accurate that ISC holds up. And once again, just by looking at the price action develop now, I can see what I call a shakeout candle forming, which is already formed here. Why is that shakeout candle? We can see how they take and snatch the liquidity stored above this high inside here. And then it is confirmed as a shakeout candle once we see the reversal and break of market structure down here. Now we've broken below this unfair price delivery here and closed below. It's not convincing, but what I expect to see would be a pullback into this particular candlestick range. Exactly the same things going on. They're looking to mitigate and cut losses on these buy orders that were filled inside here. Once again, price pulls up into this candlestick after breaking the low. Then we see a descend lower. And again, if you want to get more intricate, you can see, again, another shakeout candle form inside of this range. Why is it a shakeout candle? Once again, look inside here. They shake out market participants looking to go short. They grab liquidity. They snatch buy stops above this, above these equal highs inside here. This is a liquidity generation phase by the elite and whales. They are looking to snatch liquidity to create imbalances needed to go short. And once price breaks below This candlestick range and these lows in here, that is what confirms this range as an SC, a shakeout candlestick range. And again, the same methodology applies here, and it applies here. Banks and whales, big players, are looking to cut their losses on former bids that are now resting in drawdown in here. If you was a big player buying in this particular range here, your buy or your resting position is now in drawdown. Are you just going to let price descend without pushing and pulling prices back up into this range to mitigate your loss? Don't remember, as a big player, as a whale, you have the power, the leverage, and the money to push and pull prices. So you're not just going to let your position run off into a significant loss. You're going to play both sides of the coin. You're going to bring prices back up into this candlestick range like they do, cut their losses on bids. What do you think happens to price when big players withdraw large buy orders from the market? That's right, we see a rebalance and markets begin to sell off. Now, again, this is where it brings my attention, what brings my attention to this particular candlestick range. Once again, you can see shakeout candle has formed and confirmed by this break of structure down here, but we have not seen mitigation on the bid just yet. Price has consolidated. We've seen a small rally up into this particular range, and they can have cut losses on these bids in here, but understanding where retail market participants are looking and looking to place their orders, more importantly, is what gives you a massive edge in the market. Now, I know retailers love to look at their trend lines, and simply by drawing this, whatever they want to call it, I don't even know, a descending wedge or an ascending wedge, we can see, if you join the trend line, touching points here, 1, 2, 3, 4 meets of this descending trend line. This is, in the retail trading world, a strong resistance. Now, what do you think the retail trader is going to be thinking if this strong resistance breaks to the upside? They are going to be convinced that prices are going to be rallying higher, right? Everyone and their dog will then be screaming, moon, we're going to $589. That is when the imbalance will be created and needed. That's needed for them to reprice lower, back below these equal lows and resting liquidity, which is so perfectly sitting in the market. Look how they've engineered, big players have engineered clean equal lows inside here. 1, 2, 3 reactions. This is a support floor in the retail trading world, and they are now buying from this support floor. Look how whales and big players are providing another enticement phase, what I like to call an enticement phase. They are siphoning in the money right now from this support floor, because everybody and their dog has been trained and conditioned to buy at support. Now, again, just for better visual representation, we can draw an arrow up here. What do you think the market sentiment is going to be when we repel from support and break this resistance of this descending triangle, or whatever the fuck you want to call it? It doesn't mean anything to me. I just like drawing these trend lines on here to understand where retail traders are looking. I don't need this trend line on here. I know that somebody is going to have interest in cutting their loss on this resting bid inside this candlestick, because anybody buying inside here, their position is now in drawdown down here, and they have not had a chance to cut their loss on this resting bid. But that candlestick range is oh so conveniently located just above this descending or ascending triangle, whatever the hell you want to call it, and above this high here. So they're going to make it seem as though price is absolutely flying from a support floor. It's taken out this descending triangle. It's taken out this high here. It's snatched buy stops. It's grabbed liquidity. It's done all that it needs to do to create a large imbalance. When 80–90% of the market has then been convinced XRP is going to the moon, which is exactly what will happen when price is up here, that is when we will see our imbalance and our repricing lower, which will take out firstly this low, and then we go back to daily chart, so we can see a little bit further, then it's more than possible that we come back down here where we still have, guys, resting liquidity inside of here. Notice how these lows here, 1, 2, this is resting liquidity, is yet to be purged. We still have unfair price delivery. Down here, we still have a shakeout candlestick range down here on the daily chart. Worst case scenario, XRP is more than capable of falling down to these levels where I would simply be accumulating more. If you look at my previous video breakdowns, you can see that we was looking at this particular candlestick range on the weekly chart. Get rid of these levels here. This candlestick range is what we were looking at on previous videos. Now, if we go back onto the daily chart, we can see how price did come back down into that level. Get rid of some of this now, it's getting a little confusing. Price did come back down into this exact candlestick range, which is what is mitigation on former shorts. Exactly the same thing in reverse. Whales were shorting inside here. They had resting shorts that were in a significant loss and drawdown as price climbed all the way up here. Are they just going to send prices to the moon without using their leverage and money, flexing their arms and bringing prices back down to cut their losses on former resting shorts? It makes sense for them to do so. And again, on the daily chart, the daily candle did not close below this particular candlestick range. But where we're looking at the weekly chart, things are based from a higher time frame order flow. And it makes me believe that we are going to see multiple dips inside of that candlestick range on the weekly chart, which also ties into this scenario here, the engineered market structure on the 4-hour chart. Equal lows, resting liquidity that is yet to be purged. They are setting it up perfectly now to entice more buyers into the market from this support floor. And again, if we do break above this trend line and above this high here, that is only going to snatch buy stops and the liquidity needed to create the imbalance whales need to reprice lower. Now, I hope you enjoyed the video breakdown, guys. There's going to be a lot more coming from me in the near future.